Hello and welcome to another series of Factor Investing. Today I have a special guest, Mr. Amit Vashisht, lead passive business at ICICI Prudential Mutual Fund. So we are going to discuss about low volatility factor, how low volatility perform in a different and various market and economic cycle. So Amit, first of all, if we'll talk about the low volatility, how you will introduce low volatility to the newbies?
First of all, thank you for inviting me for this series. And I must appreciate you and entire team for starting Factor Investing as a series. What we think passive has started picking up in Indian market. People understand sectoral ETFs, market cap ETFs, market cap means Nifty 50, Sensex, because they day in day out sees what's happening in Nifty, Sensex. But this as a category is new to them, even new to the industry. So I really appreciate that you started this series. So before we move to low vol, I just want to take you back for next 14 years back. We all know there is a category called Balance Advantage Fund. So this is one of the biggest category in the active mutual fund. Many doesn't know that ICICI Prudential Balance Advantage Fund earlier used to be called ICICI Prudential Volatility Advantage Fund. So what we want to highlight, it's in our DNA that we understand that market is volatile. And generally we see one side, then we see correction also. So the one who manage volatility very well, able to turn the entire tide of the cycle. So as the name suggests, what low vol factor. The strategy is like that we want to give a stability in the portfolio. We have aggressive stocks, we have defensive stocks, but we generally have seen that client never able to time the market. So it's better to enter into those kind of products which give you more stability. So low factor is actually try to maintain the stability on the upside and downside, and you get a much better study experience.
So low volatility factor अगर हम बात करते हैं तो it's like आपका volatility कम है means आपका risk somewhere it's less. Index जब हम बनाते हैं तब कौन सा फैक्टर रिस्क मेजर करने के लिए इट्स गुड, वेदर वी शुड लुक एट द ड्रॉ डाउन ऑफ द इंडेक्स और वी शुड लुक एट द downside volatility or the standard deviation?
So basically you're taking two strategy while creating this. One is standard deviation and one is downside volatility. So before we explain, I break into two. Standard deviation is nothing but a total volatility. So what I mean total volatility, तो stock का upside भी और stock का downside दोनों की volatility को cover करता है. Downside volatility as what says market की negative side को cover करता है. So what we feel, if you're managing active fund, downside volatility make more sense because active fund manager is doing stock picking. While stock picking, his main criteria is if market corrects, he should protect the downside. Vis-a-vis in a passive, we feel it's better to use a standard deviation because passive itself is a passive product. He has to manage both the cycles. So standard deviation is covering both the cycles. So in passive, we have generally seen low vol, which is a more kind of a standard deviation product, cover both the cycle. So that's how we can bifurcate these two strategies.
The next question is like अगर हम इंडिया में बात करें, so low volatility because people would like to make a quick money. So low volatility as a secondary factor comes, or we can take it as a primary factor. I mean, primary and secondary means like a core part of a core portfolio or the satellite portfolio probably.
Can use both the ways. For example, we in ICICI have ICICI Prudential low vol and ICICI Prudential alpha low vol. So both strategies are there. Generally, we have seen if client want to enjoy a fast ride with a proper brake, ABS systems and all that, they prefer to take a balanced product, which means low vol give you protection by applying good brakes, and alpha and momentum strategy will try to play the aggressive shots. It's like Sehwag and Tendulkar. So balanced approach generally we see make more sense if you're coming into low vol.
So low vol as like a supporting factor, we can take it with any kind of aggressive strategy.
Yes, you can take that. Although there are a lot of people who prefer that we are playing a test match, derivative is good, so they prefer to take only low vol.
Okay. So if we are investing in a low vol, do you feel somewhere we are getting overexposed to certain sectors because certain sectors characteristics says like they are they are having a low volatility and very conservative approach, whether it's a pharma or IT. So do you think so?
So before I'll explain what is a sector orientation in low vol. Generally you see whether it's a factor-based ETFs or a market cap ETF, any product have some kind of sector bias. That was Nifty 50. If you see Nifty 50, more than 30% is financial services. So you generally see a particular sector is overweight in any kind of a strategy. Although if you see the current portfolio of Low Vol, it is very well balanced between 4-5 sectors. FMCG, IT, auto, banking, all are range of between 15 to 20%. There is no sector which is more than 20%. But yes, being a Low Vol as a strategy, you find healthcare and FMCG will always be there in the portfolio. So that's something which we will see in Low Vol as a portfolio.
Okay. So any behavioral drivers do you see to manage the volatility factor or the low vol factor?
So behavior biases, first of all, on the negative side, generally investors tend to see the short-term returns. So in short-term returns, they try to chase the return than the stability. That's something which goes against this as a strategy. But the evolved investor who are seeing the complete cycle prefer a low-risk stock with a stable return. So any client who is seeing the cycle would prefer Low Vol as a strategy. Otherwise, more clients are biased towards a momentum kind of a story.
Okay, thank you, Amit. Let's move to the rapid fire round. So firstly, any one key driver behind the low volatility factor?
Stability.
Okay, investing in low vol, what would you suggest, solely or the multi-factor approach?
Multi-factor.
Two benefits associated with low volatility?
Low risk, stable return.
And what kind of a risk we can say?
Generally, in a one-sided bull rally, this style might underperform. So the second thing, it's boring.
Okay, nice. And how do you feel whether this market is apt to invest in a low volatility factor?
So anytime if you feel market is volatile or you see if there's some kind of geopolitical things are happening, whenever there is uncertainty, this style will outperform any other style. So it's up to the investor at these level what they think, whether the market is in an uncertain zone, it's a volatile zone. If they think yes, then this is the best time to enter into low vol.
Okay, thank you, Amit. Thank you for giving us insights on low volatility factor. Thank you.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.